It's about that time of day again. My name is Joseph. It's Monday evening, January 9th, 2017. This is your nightly newsletter. We're covering crude, E-mini S&P, gold, euro, and of course, we can't forget about the FDAX this evening. Crude is bearish with a spike in channel, and sellers are waiting for the opportunity to sell high tomorrow. Big run lower on the crude today. E-mini S&P is bearish with a spike in range, which tells the sellers to look for those opportunities to sell the high of the range tomorrow. Gold is bullish and trading at the low of a bull channel, which tells those buyers to be looking for opportunities to rotate back to retest the high. The euro is also bullish, very perky here this evening, trading at the highs of its range tonight. And the buyers are waiting to see if they can clear through the measured move or if they need to wait for a correction going lower tomorrow. The FDAX, of course, finally is bearish and trading inside a correction zone of a spike in channel tonight, which would normally tell us to sell off these highs, but we got to get below a rising support trend line first. A little bit of a rough and tumble move here coming up for the FDAX. I got a great newsletter in store for you guys and gals tonight. As always, jam-packed with learning and earning opportunities for you guys tomorrow. Before we jump in, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching this newsletter on our YouTube channel, it's only a small portion of it on the YouTube channel. Not to worry, there's a link in the description of that YouTube video. Follow that link and come join me on the blog at Sideways Markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Heads up, I'm posting charts throughout the day on my Twitter feed. Find that Twitter link in the lower left-hand corner. In the lower left-hand corner, right below the video tonight, you'll see a spot to download today's charts. That's where you want to go if you want to download all the charts from tonight's video. In the upper right-hand corner, please don't forget, you're going to learn more with me in 90 minutes on my free pass than you will anywhere else on the interwebs. I can guarantee you that. Grab your free pass if you're not a student here at School of Trade and come out and join me as a guest for a few days this week in the trade room. And don't forget, if you're brand new here to the SOT community, we got a great frequently asked questions page on our blog, and I'm always here to help you guys out 24/7, 365 if you have any questions. Hope you guys had a great weekend. We're back to the action here this week. Today was Reaction Monday, the Monday following non-farm payrolls. Looking at of course, the news schedule for this week. Very typical second week of the month following non-farm Friday. It's a little bit empty here this week until we get later on this week. Really, the big news here this week is going to come from China. We'll hear from China tonight, and then really for the meat and potatoes will be on Friday as we hear from retail sales, right, and of course consumer sentiment on Friday. So a lot of news weighted later in the week and a bunch of Fed speakers this week, but really not a lot for us to be concerned with. As you can see here, scroll down here for tonight. Yep, we're going to have some major news coming from our friends down under at 7:30, right? The Chinese at 8:30 here tonight. Obviously, the China news is going to be, right, the big headline news number if you're trading the overnight session. Looking at this session for tomorrow, Tuesday, January the 10th, there's nothing there. There's nothing there. We get some minor news from France. We got the JOLTS report at 10 a.m. There's no major market moving news tomorrow, so we get a relatively clear calendar. That means top of the hour milestones, opening bells, closing bells. Those will be the ones on your schedule for tomorrow. Don't forget, we open up our trade room tomorrow morning in real time at 8 o'clock Eastern time. I look forward to seeing you guys there as we execute the strategy together. Let's jump right in here tonight. We got crude first. We'll go crude, S&P, gold, a little bit of euro, and of course we'll wrap up with the FDAX here tonight. Crude is bearish. Starting off with crude tonight. Crude is bearish with a spike in channel this evening after a strong run lower in today's session. Yeah, just a little bearish, right? Today's session was so bearish from open to close, which basically tells us that most traders will already be short this market and in need to take some profit, which is where the next selling opportunities will likely occur. My plan for tomorrow is to look for price to correct off these lows and then look for those counter trend buyers to try and fail to reverse the trend. The challenge tomorrow will be staying patient. When a day moves this much in one direction, it typically starts trading sideways the following day. We may continue to see price go lower, but we really want to be looking for those opportunities to sell high when price tries to reverse direction. As you can see here, you don't need a magnifying glass. You don't need to phone a friend on this one. You don't need to be a very experienced trader on this to see this market going lower. When a market makes this dramatic of a move, it doesn't really matter the size of the move. It's just it was never bullish. I mean, heck, on this particular chart, it only tested the moving average once. So when I look at a chart like this, the first thing that comes to mind is there's not going to be anybody left to sell. Everybody should have already, I mean, heck, in our trade room this morning, I mean, it was like we opened up at 8 o'clock Eastern time. By 8:02, we pretty much knew exactly what the plan was today. It was pretty simple, right? I wish every day was this simple and straightforward. I'm glad they're not, though, because it'd be difficult to make money if it was just going up and down all day long, right, like that, right? We need a little bit of a challenge, right, to get those rookies to make mistakes, right? That's where a lot of us make our profit every day. So the bottom line is, whenever I see a market moving like this in one direction, right? So obviously bearish. It tells me everybody was bearish. Everybody's either already in or they're waiting, right? Or they're waiting to sell at a higher price. And so that's literally going to be, it's kind of the gift and the curse for tomorrow. We know we're bearish, but we don't want to be selling here, right? This, of course, being the definition of an oversold point of the market. Doesn't mean the price can't keep going lower tomorrow, right? The minute I even say the word oversold, right, is the minute that this price is going to drop through the floor again. What I do need to remember, though, is that at this point, everyone's already short, and the most reliable trades, right? Remember, we're always talking about reliability. Anytime you call yourself a professional, right, when I hear the word professional, I think you have enough experience to know what's going to be the most reliable way to execute the job or use the tools of the trade. So we know right now the most reliable trades are going to come, right, with a correction higher. Now, this is where it gets a little bit, this is where the variable comes in. How high that correction higher, right, that's what we don't know. Most of the time, though, in a large move in one direction, right, we end up finding ourselves in a trading range, right? And so that's what you want to be keeping an eye out for tomorrow. Selling the high of that range, right? Selling high, and then taking your profit, right, at the low. It won't be unless we see a very strong breakout pullback, right, that can clear and hold below that range low. It won't be until we see that strong breakout pullback that can then keep going that we can actually feel safe now and confident, right, selling new lower lows. Because oftentimes what happens is those types of moves, right, they end up getting sucked back up into that range. So the word of the day tomorrow is sell high, right? Find areas of resistance to sell high and be patient with those breakouts to the downside. Now, of course, today was a good example, right? I mean, you could have sold everything. You could have sold high, sold low. You could have sold whenever, however you wanted, and you would have made money. These types of days are rare, and these types of days are what new traders struggle with, right, to see what happens when we don't get days like this, right? You're only get these types of days probably 10% of the time, right? The other 90% of the time, it'll either be range bound, right, or you'll see that ebb and flow where you don't have the luxury of just being able to sell low, right? If you sell low in most typical markets, you'll end up having to take a lot of heat against your position before the price rolls back over. So we know we're looking for opportunities here to sell high. The first thing that comes to mind is this unfilled gap just above the 52 big round number. I've really got my eyes on this range here between 53 and 25, right? Give or take a few ticks here and there. We'd love to get this price up, right, and then sell it back up in this range. Above the high of that trading range from 52, 53 to 52.25, it's really going to be all about what the market looks like at this time. For example, if the market grinds higher here, grinds higher, you're going to have sellers basically waiting now for that price to roll over so they can jump in and sell it back down, right? And sell it back down. However, right, if that grinding lower ends up turning into something like this, bam, right, where we see all the sellers just walk away, right? Maybe we hear from OPEC tomorrow. Maybe we hear some crazy news that comes out. And instead of kind of grinding higher to attract more sellers, right, we grind, and then bam, right? If we see that strength move, well, now all of a sudden now this market has turned into a short-term, right, bull market. It may still eventually come back down, but we can't be as aggressive with it. So a couple scenarios we want to be thinking about here as we go into tomorrow is something like this, right? Where, of course, the short term would be price goes up above the moving average, fills that gap, hits this falling resistance trend line, and then we can sell it back down, right? Wouldn't that be lovely if we just get that postcard perfect opportunity, trap above the moving average, hit that falling resistance, and we get a great chance to sell high in a bear market, right? Or maybe we get something like this, right? Where price goes up, comes back down, right? We see it come up, it grinds, and then bam, right, comes back down, and we can sell it, right, on the failure and the breakout pullback, right? Those will be two scenarios to really keep in mind here for tomorrow, right? Either a short-term correction up to that trend line, or we get back into that range, right? Another opportunity here, another scenario to keep in mind would be, right, if we just kind of sit here, again, this kind of range might be higher, it might be lower, right? We go up, we look to sell it, right? Look to sell it back down again, right? So find that trading range, sell it back down. What you want to be careful about for you perma bears out there, right, is a situation like this, right, where we see that price kind of grinding, and then for whatever reason, again, I'm not going to try to predict what the reason will be. We see this bam, right, this real strong move against the trend. See, what happens is when strong moves like that happen, it's going to intimidate the sellers, right? The sellers are no longer going to just blindly sell. They're going to wait for more proof, and that's going to give the buyers a chance now, right, to grab it, hold the pullback, right, hold the pullback, and then start buying those pullbacks for a move back up to test the correction zone, and of course back up, right, to retest today's highs. So on days like today, when everybody's already short, we definitely want to resist the temptation to sell at the low. I realize price may keep going lower, and I realize there may still be opportunity here to sell low like this. But historically, right? I know. Think a little bit bigger picture here. If you took 1,000 trades over the next few months like this, selling low is not going to make you money, right? So good to have the right habits being built right now. So sell high rather than sell low. Watch out for that kind of what I call the disconnect, right? That disconnect will be the time when you would think, okay, it's time not to be selling, right? The disconnect is what happens when we kind of grind higher, and then again, for whatever reason, I'm expecting it to be above this range here, right? So grind higher, and then blammo, right? We get that big kind of that disconnect. It's that time when the bears in the market go, I'm done. They walk away, and then that big push higher gives the buyers, right, a chance to grab control. As long as they can hold, right, that next pullback, we can then buy, right, until it gives the disconnect, right, and goes back to being a bear market, right? Don't forget, I mean, we could see a double-sided trend tomorrow. We could see it go up, hold the pullbacks, disconnect, go all the way up into the correction zone, and then, right, and then collapse from there, right? For all we know, right, collapse from there. Big move lower, and then ride it back down. So we definitely can see both sides of this market tomorrow because today's range was so big. How will we know? We'll wait to see what the market looks like tomorrow about 8 o'clock Eastern time once we come in and trade the strategy together. Boy, look at that S&P here. S&P is bearish with a spike in range this evening, which tells us to look for selling opportunities at the high of the range or after a successful breakout pullback below the range tomorrow. Boy, they almost slipped one in us here tonight, right? Trying to break below this low right now. The big clue this evening is the fact that the bears haven't, or now they have, right? They haven't been able to continue the move lower since much earlier in the day today, telling us that sellers didn't see value in selling low and reminding us to stay patient for higher prices, or we need to see proof, right, getting below that range for a break lower. So they're trying to give you that proof right now. One thing to keep in mind for tomorrow, if we don't get, right, sorry, if we do get the break lower, be careful not to chase the move because we have that double down and measured move support levels just below us right now. So stick to traps if we get a strong push lower and avoid selling into that no trade zone around 60 and a quarter tomorrow. All right, well, the S&P right now as we open up in Asia is pretty much demonstrating to you, right, the first push outside of this range. Now